Hey everybody, it's your boy Chicago Sean. No longer. I'm Options Sean on Twitter now. Sean McLaughlin coming to you live from the All-Star Charts Stock Media Theater. Theater? No. Office? No. Studio? Yeah, studio. That's what this place is. I'm here in San Diego, hanging out with the team. We've been in California all week. We attended the Future Proof Conference up in Huntington Beach for a few days, and now we've been here in San Diego in our studio recording some follow-up stuff for our documentary, our Asia documentary that me and Steve Straza did this summer. So a lot going on, been a busy week. But hey, today is September 14th, 2023. This is the Options Jam session, the All-Star Options Jam session, where we review open trades that we have going on in the All-Star Options subscription service. So we're going to update you on some new stops, some new stop prices, update you on positions that we've exited, and we'll touch on some of the new trades we've put on recently. But before we jump into all that, I have to, of course, drop the old disclaimer to make the lawyers happy. Everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way from watching my process. All right. So let's start at the high level. I always like to start at the high level with what's going on in the markets. Here's a chart of the S&P 500 over last year. As we've been talking about for the past several weeks, is that the S&P is just kind of stuck in a range. It's not really showing any signs that it wants to break out higher, nor is it showing many signs that it wants to break out lower. We appear to be kind of stuck in this range between 4,300 on the low end and 4,600 on the high end. Now, that's not necessarily a bad thing. We can put on trades that take advantage of sideways markets, which we have done. And we'll talk about that in just a little bit. But just further color for the market that we're in now, here's the volatility index, VIX. As you could see, down near the lowest levels of the year. I don't see that changing anytime soon. I think maybe we just have to wait until the next earnings season, which is what, October? Until we can start seeing some movement again and see if the S&P can break out of the range that we are in. All right, so let's talk about trades we have exited since we last spoke. This is a chart of IonQ, ticker IONQ. And we put on a bull call spread back on May 24th. We bought the January 10-20 bull call spread. We paid $1.85 for it. And as you can see, we've had quite a run in this stock. We got in here May 24th. It ran all the way up. We got so close to getting hitting our profit target right here in this spike. I think this was late July. Missed it by a hair, which was a bummer when this thing started selling off. And I was like, oh man, we were so close yet so far. But the rally of the last few weeks has brought us all the way back. And then earlier this week on the 12th, so that would be Tuesday, during this spike, this red candle here, during that spike near the top, we were able to get out at our profit target. We had a resting order to sell this spread for $6, and we got it on Tuesday. So we are out of IonQ. Nice trade. All right, next up, the next three trades here are all trades that we've put on recently to take advantage of the sideways trend that we're talking about in the S&P 500. We've put on a bunch of delta neutral-ish short options premiums trades to take advantage of this environment. And first up is Microsoft. We got into this trade on August 23rd. And the bet I was making is that these lows here that are highlighted by this gray line, my bet was these lows were going to hold, and that also it was not going to break out above this high from early July. We did a short strangle. We sold the October 310 puts and also sold the October 370 calls. And I collected 775 and I put the trade on. I was able to buy it back this week, or actually on Friday of last week, buy it back for half of what I sold. So I sold it for 775. I bought it back for 380, I believe was what my debit was to close the spread and book the profit. I could have been greedy. I could have held on for more profits, but that's not my move when I'm holding short premium trades. I just like to close the trade down when I've earned half of my original credit. And I don't want to sweat out those last nickels and dimes and quarters. It's just that's somebody else's problem. I take the cream off the crop, off the top, and move on to the next trade. Similar story here in the semiconductors ETF, ticker SMH. We got into this trade on August 21st. We did an iron condor. So similar to the Microsoft trade, only the big difference being this was a defined risk trade. So we were short the October 135 puts and the October 165 calls, but we protected the spread $10 wide on each side by buying the long October 125 puts and the October 175 calls. The credit we brought in was 265. And again, the most we could lose in this trade would have been 735. But of course, we were never even threatened. Our stops were these levels up here, 165 above and 135 below. As you can see, Microsoft or SMH, the semiconductors, came nowhere near threatening our stop loss levels. So we entered on the 21st. We got out this week on Monday, bought it back for half of what we sold it for. We sold for 265, bought it back for 130. We are now out of the SMH Iron Condor. Lastly, hey, shout out to the community and All Star Options. We have a live chat room for All Star Options subscribers where I get to interact with our customers. Our customers get to interact with each other, and they get to interact with me. And this trade idea was actually a little bit crowdsourced. There was back on August 25th, I was didn't really have many good ideas. I was running out of good ideas, and a few guys jumped in and interacted with me. We shared some ideas, and a subscriber brought up this chart in Lowe's, ticker LOW, and said, hey, how about this one? And you know what? He was right. I said, hey, that does look good. And so we put the trade on. We shorted the October 210 puts and the October 240 calls. We collected $450 for it back on August 25th. And just this morning, I got out 225, bought it back for 225. Again, half of my original credit. I know some of you guys got out of this trade yesterday. Hey, you got better fills than me. I had to wait till the open this morning to get out, but I did get out this morning, 225. So we were out of Lowe's. And hey, thank you, community. That was a great trade. Well done. All right. I'm going to update you on a couple stops. We just have a couple. I know last week we did a lot. We were really just playing catch up with a whole bunch of charts that needed updated stops, but now we just have a couple. First up is our long straddle position in TLT. These are September options. So guys, these expire tomorrow. All right. So this is a trade that is a winner for us. Not a huge winner, but it is a winner. We're long the 103 straddle. So that means we're long the 103 calls and the 103 puts that we paid $625 for. We got into it back on June 21st. As you can see, TLT is broken a lot lower. And so we are sitting in a little bit of profit here. We can exit this today, but right now my stop loss level for now is 94.60, which represents yesterday's, I think this is yesterday's intraday high. So if we break about 24.60 today intraday, I'm going to close the trade down. I don't usually do intraday exits, but in this case, the position expires tomorrow. So any break above 94.60 today, I will close it. Otherwise, tomorrow, we have to close it, right? Because tomorrow, after tomorrow's close, these options expire. So we will be closing this trade either today or tomorrow, booking a profit. How much profit depends on what the market does over the next 24 hours. But congrats to anyone who was in this trade with us. It worked. Not as well as we wanted it to, of course, but we were hoping it would break this gray level here. And this was our profit target. If we could break this level, we were going to get out, but looks like we're not going to get there, but it's a win nonetheless. We'll take it. Lastly, the last stop update is our position in Palo Alto Networks. We're long a bull call spread, or no, we're long the 250 calls, January 250 calls. I'm moving my stop up to 225 now. This is a really kind of busted chart, right? We got in on June 2nd. Looked like it was going to really take off for us. It was looking great. Then as you can see, I believe this was an earnings gap down here. It gapped down. It threatened to close below our stop loss level, but it rallied really hard here. Then we had another big gap back up. Sloppy chart. I don't really like it, but I'm going to give it some more room still. But 225 now is my stop loss level in Palo Alto. If we break below 225, I'm out Otherwise, we're going to hold the trade and stick to the plan as laid out in our blog post. All right. Next up, I'm just going to go through a couple quick trades. Not even actually not give you the details of the trades. I'm just going to let subscribers know that if you haven't seen it already, you can go to our blog, go to our site. There are new trades in Deere, ticker DE, and Pulte Group, ticker PHM, a home builder. As you can probably guess in both of these charts, if you look at them, they're both going sideways, which is the theme of the markets these days. So these are, we're selling premium here. No secret, but go to our website to get the details, to get to see the exact trade plan and our plan for moving forward with these trades. All right, folks, that's all I've got for you today. It's been a wild, fun week here in California. We still got a lot of work to do today, working on the documentary. But I'll be back home this weekend, and back on Monday, it'll be all systems go from the home office. But it's been fun being here, and I'm glad you guys get to see a little bit of the studio. If you guys have any questions, shoot me an email, info@allstarcharts.com or Sean@allstarcharts.com. That'll get to me either way. All right, everybody, have a great rest of your week. Have a great weekend. I'll talk to you again tomorrow. Bye-bye.